there. Let's get you our first sort of market veteran on the program. Arvind Sanger is managing partner at Geosphere Capital Management. Arvind, good to have you with us here. Good morning. Thanks very much. Now, let's just start with what's imminent. The most imminent. Lots of things are imminent, but Bank of Japan is most imminent. What does it mean? Yen is an important sort of carry currency. Of course, the hike, etc., is well telegraphed, so shouldn't surprise now. But if they sort of exit this low interest rate, negative interest rate policy over a period of time, what does this mean? They're pulling one way while the world seemingly is pulling the other way. So they're hiking at a time when the rest of the world will be cutting. Your thoughts, Arvind?
Well, they were suffering through deflation when the rest of the world was suffering through inflation. So, it's been a long, long wait for deflation to end in Japan. And so they've had their own problems, their demographic problems, all the other problems that they have. And therefore, I think we should not treat this as a broad lesson for anything else. I think it's just Japan has been on a very different trajectory than the rest of the world. And this is some signs that they're seeing economic strength, as well as, it's not just a bad news inflation, it's deflation ending, and it's more signs of the economy starting to stand on its own feet. So therefore, the support that the central bank needed to give is removed. And in a sense, that's a good sign for global growth, that Japan is able to finally stop having to, feed negative interest rates to support that growth.
But in terms of the carry trade, Arvind, any thoughts at all there? Portfolio flows.
I think from a portfolio flows for India, it should not really matter that much that if Japan, tweaks its interest rates that much. And for global portfolio flows, I think the markets have already adjusted. Like you said, this has been very well telegraphed, and therefore I don't think it's going to make a big difference to portfolio flows. I think there are other more important things like what the Fed does, what's going on with global growth, what's going on with Indian valuations and growth that will matter more for India than this Japan rate decision. I don't think it'll have a big effect on either Indian or global flows in a meaningful way.
Arvind, China's economic data so far in 2024 have beaten analyst expectations. So whether it's the retail sales or the industrial output data, all important economic indicators, and they've looked up. How are investors reading this data out of China, and is it pushing them towards that market?
Well, look, China has gotten to valuations which are extremely low by historical standards. But the problem for China has been that historical standards don't apply when you have, in the past, governments that were pro-business, pro-private sector. And now you have a government that has shown time and again hostility to a lot of private sectors that don't conform to their expectations or their requirements or their needs. And therefore, there was a valuation that supported the market, but there wasn't signs that anything was turning. The signs that we've seen are tepidly positive. Let's not pretend that it's kind of all, time to break out the champagne, as they say, in terms of celebrating China's rebound. But yes, there are signs that some parts of the economy are rebounding. The housing is still not, but other parts, are showing some recovery in confidence. So, I think the best we can hope for is a tepid bounce in China's sentiment, but a bigger bounce in China's stock market because the market is so oversold. So that's the way I would look at it in terms of the economic outlook versus the market outlook. If the market can have a bigger rebound, the economy itself, I think the rebound will be relatively modest, but at least the bad news is no longer coming, and it's not getting worse, it's getting slightly better. That's the good news about China. And, frankly, maybe a little bit of the portfolio flows in India may have reflected a little bit of money going into China, but I don't think it's an India versus China in a meaningful way anymore. But in the short term, there can be modest swings there.
Okay, all right. Hi, Arvind. Always good to hear your thoughts. But in the next 48 hours or so, we'll be hearing from the Fed as well. What are your expectations from them? And also, I was looking at the probability of a rate cut in June. That's come down considerably to the mid-50s now. Are you factoring in a cut in June itself?
Well, we have been, of the view that either we were going to get a recession, which has turned out to be wrong, or that inflation would prove to be stickier than the Fed. I mean, it was two extremes, I admit, but I think the second scenario may be coming true, that inflation may prove to be a little more sticky on the way down. And if inflation does prove to be more sticky on the way down, then I think the Fed is going to have to pause. But pause longer. It's already pausing, but it may have to pause longer before doing anything. And I think my sense is that this meeting may not resolve that decision. They may stay pat on 3 rate cuts for the year, data dependence, all of that stuff. But I think the tendency, in my opinion, is to stay at these levels longer. And therefore, June is becoming a question mark, because whether the Fed signals in this March meeting that they're going to stay pat for longer or not, the data is what is driving that fear. And I think the Fed is probably also watching that data closely. And I'm not sure if they will definitively give out a more hawkish statement on Wednesday. But, I think the markets are very finely paused on that issue of June. And I'm not sure if this the press conference that the Fed governor chairman has after the meeting will meaningfully answer that question.
Arvind, just one sort of last question from my side. Many here in India are talking about how maybe we've kind of, sort of finished an up move. Both, those who track a pure price action and otherwise as well, sort of experienced fundamentally, I heard one or two of them saying that maybe, this is sort of finishing a up move which has lasted a number of years and which has been very, very sharp and strong. Do you concur with that kind of a viewpoint, Arvind? How would you respond?
Well, look, when I was on your channel a few weeks ago, I said that the valuations were excessive. I've even used the term indigestion on the small cap valuations. I think the correction in the small cap markets and the mid cap markets has been even sharper than the Nifty. And we, for one, are more have shifted some of our investments into more larger cap companies because it felt like that. And you're seeing actions by RBI to take some strict action against some of the NBFCs. And that has given some pause on some of the more speculative ends of the market. SEBI is similarly trying to do something on some of the mid cap and small cap portfolios. I think this is healthy. I don't think the market rally is over, but could it take a pause for a few months? Yes. And I don't think the elections are, the discussion last time we had was that elections, everything is known, so maybe the market should celebrate that. No. If election outcome is already known and everybody's optimistic, there's only room for downside surprise. Upside surprise is not going to come. I'm not saying that there's going to be a downside surprise, but the market may worry a little bit about whether everything is that hunky-dory. And I think, therefore, what we are seeing is a healthy correction in what I think is a long-term growth story that has not changed from where it was a month ago. But I think just the market got too far ahead in terms of its euphoria.
Arvind, we'll leave the conversation here for now. Thank you very much for joining in. Good night to you.